Well, we have a direction and we're finally over that doji that we were concerned about. The question is, what happens with CPI tomorrow? You have a big development going on here because we are seeing a rotation and we're going to discuss it in some detail here. I really don't like the way that you're acting and how fast you're just dropping out of bed. It's way too fast. There's no depth to the market. I don't mind this stuff when you're seeing at 1 o'clock in the morning, but when you're just sitting here at 11:30 on a bond auction, which is supposed to be a silly bond auction, and you do this, meaning by silly meaning you really shouldn't be moving like this on a short-term bond auction, and you have these kinds of moves where it takes you down like 40 basis points, you need to pay attention to those. And you can see this at 2 o'clock, the shake and bake, and then they rip you up into 3, only to drop you down in the last hour, and then everyone says, oh, we better get in. After hours, you had a lot of activity, and we're going to go through some of that, specifically what's going on with tariffs, Mexico, and how that could actually shake up the auto industry. We should cover that a little bit. But we really need to dive into CPI. A couple things. Just to start, this is the SPY versus the NASDAQ, and the SPY is getting its butt kicked versus the NASDAQ. That's what you want. What you don't want is you don't want a flat line, which might give you a change in trend. You always want the NASDAQ outperforming relative to the SPY. This is what you want. Remember, this is when you were super smart trading, and now trading's gotten harder, hasn't it? And when you start to see this, here, I'll just show you. So what you're seeing here is you're seeing this battle between the SPY and Q, and you're in this trading range. And it might not look like much, but it is. And so what we're seeing is we're seeing a little bit of a change in trend, and it started back here in June. And since then, we've really been flatlining. And this is super important for people to get, because when you see these change in trends, you have to pay attention to it. And we're starting to see it everywhere. We're seeing it from things like Micron, which are out there and they're just ripping up. And then you start looking at the analog names, which are ADI and Texas Instruments, and they're ripping. Here we are. Hold on. And they're ripping, right? But then you start looking at names that are doing the AI, such as NVDA, and they can't hold. AVGO hasn't had an up day since its earnings, but today's day 2 or day 3 rather, and I'll clean this off. And maybe we're setting up some dojis here, but you're seeing these rotations and they're everywhere. And it's really important to see this because you're rotating into regionals, you're rotating into some pretty strong interest rate sensitive names, but at the same time, you can see names like Merck that are lifting, or Visor that are lifting and breaking out, and Lilly that is moving out today over its 55-day moving average. I use a 12, a 22, and a 55. You should use what you're comfortable with, but you can see it right here. You're back over for the first time since breaking it. So you are starting to see some defensive posturing here, and I think that's super important. If you take a look at XLP, you're not really going anywhere. Look at the Costco's, you're not really going anywhere. Look at the Walmarts. So where are they putting their money? And I think that this is really important. They're buying biotech. They're buying pharma. You are seeing a certain level of rotation here. When I go through like the names, I'll go through today. And so I always do this and click on the names that I look at during the day just to kind of see which ones held, which ones fell apart. And you're losing a lot of the big dogs that were like once rallying. In other words, they're not leading today anymore. You're not seeing that sense of leadership anymore. And it does happen. You do go sideways. It doesn't mean you're going to fall out of bed, but it does mean that we are going sideways, and it does mean that we are starting to see some new leadership. I do think we have to watch the 10-year tomorrow. I think this is going to be super important because a lot of the things that I'm seeing is we're not able to really break that 450 level, and that's exactly something that we want to watch. But before we go into specific names and some of the things that are happening after hours, we need to spend some time on what's going on with CPI in detail so we're prepped for tomorrow. Now, before we get into all the CPI data and what to look for, I just think it's important. They're not really predicting this one to be a big one. And by big one, I mean implied move. If we look at the S&P implied move for CPI right here, we can note a couple things. Very first thing that we should note is this 0.8. And what that 0.8 is, that is the percentage of implied move. So that's roughly 80 basis points that you're looking at. And you can see that the standard deviation, the last, the average, the low, and the high. So you're right in line with the average move. And what we've seen here in the past is some of these were just absolutely insane moves. So if it's wild, then it's going to be wild. But before, people were used to these 2.5%, 3% moves that you could see on some of these. And the prediction right now is nothing like that. So if it's wild and it's out of whack, then yes, this is going to be kind of crazy. But the prediction is that this is going to be somewhat muted. And I find that interesting. It might explain a little bit of why the market on close acted the way that it did. And what I mean by that is we really didn't have a lot of positioning or selling off at the end of the day. You just had a lot of position buying more than anything. But definitely think it's important to point out, and let's go forward. Now in front of you is just the estimate from Bloomberg on how everybody sees this. And you can see your median estimate is 0.3. The average is 2.8. The high is 0.5. You have 0.2. You have 64 people that are there. And your standard deviation is 0.06. So everyone's pretty much in line with where they're at. And you can see the kind of the dispersions of it, but I would say that you're pretty much right in line with everyone's pretty much right in line. Now, how does Goldman see it? They see the month over month printing at 0.16 and core month over month, or I'm sorry, they see CPI hitting at that month over month right here. And then they have the core month over month at 0.31. Both numbers are in line, gives you a 2.4 year over year and a 2.9 year over year for core. Pretty much everything right in line. Now for the fun stuff. They break it down pretty clearly, but I think it's worth spending some time on here. There's a 5% chance, according to them, that you are going to print above 40 basis points. If you do, you're going to lose 2 to 3% on the market. And they're calling this a first tail outcome, meaning 5%. When we show that dispersion, they don't think this happens, but it's important to just understand. It would be hotter on the core side and core goods and services, outcome that would be incongruent with non-farm payrolls, meaning this would be way out of whack if this happened. That said, this kind of print could likely map higher expectations of inflations. Trade war, look for yield curve to reprice higher. Longer term, if we saw growth hold up, resale sales would be the next print. We could see 10-year make a run at 5%. So this would be bad, really bad. So tomorrow at 8:30 when this comes out, if you see that 0.4 or 40 basis points, you have an issue. But they're saying you have about a 5% chance of that. Maybe that's the case. I mean, I see some things that could be higher the way that I do it. I'll show you how I kind of back envelope it. And it's a pretty good way to do it, but let's just keep rolling through this first. Core month over month prints between 3.5 to 4. The S&P loses 125, 175. Here's what I would take from this, besides the fact that we're going to say OER, which is owner rents, equivalent rents, are going to be in line or higher, and that would be sticky. Bonds will react negatively, meaning they're going to sell bonds again. The easiest trade in the world is if these come out high. The easiest trade in the world is just sell bonds. TLT, TMF. That's like the de facto trade. And then, of course, IWM and the TNA, TZA trades, just because they benefit the most and get hurt the most from bonds because they're smaller corporations. You can see those trades tomorrow. You just watch that at 8:30. But there are guys, you have a 25% chance. All right, so then we come to this level. But before we do, you can see 30% here and here. So you have a 30% chance the way that this is triggered that number is going to come out and it's not going to be that groovy. And I think there's something to that. So you look at that and go, okay, well, that number is not going to be that fantastic. That could be a problem. Yes. 35% that you come in line to above. And that's going to give you 25 basis points to 75 basis points skewed to the upside. The base case outcome range with the higher end, we see sell-off in the lower end range continues to rally. Okay, thank you, Captain Obvious. And then you'd say, all right, well, that gets us there. But if we come in lighter, what do we say? 1.5%, 2.5%. And this ties in, given the recent WCPI prints, the G7, we think a slighter higher chance of this outcome unfolding grade skewish distribution. Okay, core month over month prints below. S&P gains 2.5%. Okay, so let's just say core prints come in below that 0.25. We're going to rip. Anything better than 0.3, we're going to rip. Okay, but here's the thing. The other tail outcome, similar to the recent EU, UK, would be a material dovish print. Look for bond market to add at least back 25 basis point cuts. Equities react positively in the bull steepening that likely ensues. Options are pricing in a 1% move. This is why you spend so much time on this. If you want to price in a 1% move, what are they saying is probably going to happen? If you're pricing in a 1% up or 1% down, that really puts you at this 2.5 to 3 more than anything else, or in here where you're at 3.5. So they're telling you that you're coming in just by the way that this is structured, as the dispersion did, and I'll clean all this off because now it's a mess. But they're really telling you that you're coming in at either this between 3.5 to 2.5, and any outlier in there is going to be your real reactionary level. And I'm just going to say that again, just based upon, if you look at the implied vol and then the percentages, and you can see that here. But anything out of this 2.5 here or above the 3.5 here, that's really where you're going to have your issues. And that's how you should be looking at this. And this is how I would use this data. It's very helpful to understand this so that when it happens at 8:30, which we'll be live for by 8:15, you can see exactly how to move and where to go from there. Now, if you've watched this channel for some time, one of the things I really like to do is just mark off where crude oil is. So at the beginning of April, you can see that crude oil has dropped precipitously. And then we just do the simplest of things and we just go to the end of April and we're just going to mark that off as well. And we can see real clear here that we have a drop. And from that opening April to here, by the end, you were down about 18% on crude oil. And you had this massive, massive drop. That massive drop was due to a couple things, but that massive drop essentially was what? Well, that massive drop was due to a lot of factors. You had the tariffs that were a big issue. You had a lot of people concerned about pullbacks, recession, stagflation, lots of things going on here that led to this. From this area over, and then we would just start here, May 1st, and then come over to this and go May 30th, which would put you right here. And you would see that just off that we're obviously going to be positive. And we can measure this off. Take it from the open to the close. And we would see that that is a positive 4% versus this negative 18% drop. No matter how you look at it, whether it's core or non-core, even though energy's not in it, oil and gas are in everything. You had a major drop in crude during this period of time. That is definitely going to be effective of that number. During this period of time in May, you're going to have this number, which is going to show crude that is picked up. Now, the other thing you can do with this is just drop the VWAPs in place. And you can see pretty clear as well that the average price here versus if you dropped it from here, you'll see the average price as well. So from the open, you could just see that all it did was get more expensive as the month went on. Whereas here, all it did was get cheaper and cheaper as the month went on. And that's going to be a factor in your numbers, your CPI numbers. It just is. And I do believe it shows up in core as well. People say, well, it's not in there. Oil's in everything. Oil and gas, they just are. So if we look at it that way and then go RBOB, and the reason we do this is just to go look at gasoline futures as well. And when we look at gasoline futures, what we'll see is we'll just see this like super, super clear, right? So you can just see here you are in April again up here, and then you just come right down here, and let's just find the 30th one more time, and you'll see it at this level. Just mark that off right in there. Okay. Then after we mark that off, what we want to do is go to this. And you can see that, of course, you have the same kind of drop. Do yourself a favor and just drop your line, and you'll see it again. It's not rocket science that the average price over time was lower, whereas if we went to here and just mark this forward, which will be on May 1st, that clearly you've been higher, and you go into the 30th and you come across here. People say, oh, it's the same average price coming across. It's not the same average price when you take it all together from those dates. It's a very different price, and you also have to take into account the movement during that particular period in time. So it does make a difference, and it is certainly something that I would be cognizant of. It's definitely something that I personally would be paying attention to, and I think that that's really important for you guys to pay attention to as well. As I said, we'll be live tomorrow at 8:15 to go through it. You know, it's always when they think it's a non-event that it becomes a big event. And to me, you can just you can feel it in the market a little bit. Although you were pretty light today, you are seeing that rotation today, and we're going to go through that. Now, before we get into specifics, we did have some breaking news tonight as I was recording this, and I think it's pertinent to go through it. U.S. and Mexico are close to a deal to remove Trump's 50% tariff on steel imports up to a certain volume. So we are seeing the steel names come in pretty hard after hours, and we'll go through that. But you all remember that it was back in here. I believe it was, let's find that Friday. I think it was this Friday where they came out and said, we're going to go out there and we're going to make sure that U.S. workers are protected because we're going to put these huge steel tariffs up. And those steel tariffs are going to protect American jobs. And I believe that was the May 30th. There's a way to check this out. So what you would do is you just go take a look at Cleveland Cliffs, for example, and you just go look, yep, so that was May 30th. And then we can see that tariff held 1, 2, 3, 4, 5, 6, 7 days. So that was 7 days of that tariff. And now it looks like Mexico is going to get some kind of pass on it. So what that means is something like Cleveland Cliffs, these kinds of names are going to sell off pretty hard on that because everybody knows, if you know this, Mexico's been a backdoor through aluminum and will be a backdoor into the United States. Everybody knows this. So what you're going to start seeing is these kinds of names like NUE, which are going to continue to drop, and they'll probably come in a little bit harder than this. I mean, if you really think about it, they should really come back down to where they were. Usually it doesn't happen right away. It's usually kind of a slow trickle, but that should start to happen where they start coming down a little bit more. And then from there, maybe they start to rebuild. But the three to me that should probably get hit the hardest are going to be something like Steel Dynamics. And then you should see NUE come in pretty hard on this news. And then, of course, you'll see Cleveland Cliffs that will come in as well. And I know people are looking at these thinking, wow, they're down. What you have to really do is you have to go and take a look at where that news hit and then go from there. Now, they'll spin this as, oh, hey, it's okay because it's just Mexico. But if anybody knows where the largest stockpile of China aluminum is, it's in a country. It begins with an M and ends with an O. So just understand that. Everybody that understands how this is done knows that. So these names will probably take it on the chin pretty hard no matter what CPI does tomorrow. I think it's super important, and that's why I wanted to bring that out. Let's talk about Tesla. Tesla went from we need to get out of the stock immediately because he lost all favor to we're up $75 over where he was, the cat's pajamas and with him. I sound cranky on it, but I find it just absolutely hysterical that we went from 323 down to 275 and now you're bouncing back and you're 327. It's amazing to me that people are just coming into this. The only thing that I could think about is that they're playing the Austin Thursday. We're going to go watch 10 robo-taxis drive around in a circle with some guy. Hopefully he's not remote controlling them. And maybe they actually will pick people up and drive them around. Okay. And so I just look at it like, all right, so then what happens? But from a technical standpoint, I think you have to look at this and say to yourself, wow, we gave that all back. All that is just evaporated in 2 days. Is that good or bad? Well, there's a couple ways to look at it. If you're trading it, it's good. If you're investing in it, it's bad because no investor is out there going, you know what I need to do? I need to get more exposure to this. So obviously it's trading and obviously it's short covering because no institution is going to go out there and just load the boat on it this way. There's too much uncertainty. So we came right to this level today and now we're holding that level and we're really having a hard time with it pre-market or post-market rather. And we were having a hard time with it during the day. So you're going to want to watch this tomorrow. Now the CPI data could flip that. We could flip that level very easily on that data. And that's definitely something that we're going to want to watch. But I don't know if we do. I don't know if we do flip that or we don't. I have a short bias on it right now. I have puts on it. To me, it's absolutely ludicrous the way that it's trading, but it doesn't matter. Ludicrous could go on forever. It could go to 600 and be even more ludicrous. We all know this. Price is price. It's going to do what it wants. What I liked about it, where my interest was when we hit here, and then all of a sudden we hit the shooting star right into the close, and then we couldn't get over it. That was pretty much all I needed to see. After hours is after hours. It's where all the giggles are. But if you take a look again, if someone told you, by the way, you're going to be overbought, and if they told you here on Thursday, that by the end of Tuesday you'd be even higher, no one would believe them, but here we are. So maybe Thursday's great and maybe the thing's amazing and everyone's going to go crazy and then maybe it explodes up. The one thing that I would say is that if they are able to go out there and bring in cheaper steel from Mexico into the US, well, it does bode well for these types of corporations. And maybe there's something like that. Maybe there's some kind of deal coming for the auto manufacturers that, I'm just not aware of. And they're all going to benefit from it. But this seems to be a short squeeze, and it seems to be a darn good one at that. I'm really surprised at the movement of it. I had one long trade that I took out earlier and I did okay with. But candidly, I had a short bias on it all day. And it's really that slow grind in here. And then it just kicks right around that 1 o'clock and it just starts grinding. So perhaps it's short covering into CPI. Either way, we'll see what happens tomorrow. But I do find this really interesting. The other thing that I want to say that I see out there is depth. And I'll show you what I mean by that. We're seeing a lot of this kind of behavior. And I'm just going to drop this to a 1 minute. And if you had to take one more thing from this video, it's definitely going to be this. I'll show you what I mean by depth. So I'm going to get rid of the RSI for a minute. I just want to mark this off. When you look at this, it's starting to look like an EKG. So here's the ninth. Look at the spikes and look at the trough valuation. And what you're starting to see here when you look at this is this was a lot tighter. This is getting a lot looser. And you're starting to see more and more of this kind of behavior. If I start going through this, you'll see what I mean. You had these tight movements where you were testing levels and all of a sudden you're getting this wild behavior. So when that starts to happen, what you do, and you see how tight you were in here, sometimes you had it, but not as much. There's a couple things you can do to start monitoring it because what will happen is the risk goes up. What you can do is you can look at ATR. And ATR is just super simple. It just tells you the average true range of any movement. It's very simple to look at, right? So you look at ATR and go, oh, okay, well, here's NVIDIA, and it's been falling off a cliff from here down all the way down to here. And then you go, okay, historically, what tends to happen? When we get to a certain level on ATR, you start seeing does that level stay or do we start to see spikes at those levels? So what you do is you just kind of drop off, and you do this with any stock and say, oh, okay, well, this is where we held. And then what happens when the ATR gets to something like this? Well, it tends to start moving into a more volatile area, doesn't it? And so when you start to see this, whether this was support or resistance, you want to pay attention to it. And you can do it literally with any name. It doesn't matter the name. You can literally just find these support levels and resistance levels and go and take a look at them and say, oh, look what happened in here. Look how it expires, retests. And that'll tell you when it's going to start getting a little more wild. It doesn't mean that you're going down. I want to be really clear about that. It just means that it's going to get more wild. And that's really good if you're a trader. For example, if you take a look at PLTR, it's been all over the place. But if you start looking for these levels, you'll start to see like, oh, well, here's a support level on ATR. And that support level on ATR is not going to tie into your daily range. It's just going to tie into your daily range on your ATR. I hope that makes sense. If you're interested in this, let me know. I can do a whole video on it. It is a little more advanced, but it does tell you just the volatility of an individual name. Remember, these names trade like what? They have personalities. They trade like the people that trade them. They just do. So when they get a little too tight in here, and they start getting a little more, as I like to say, loosey-goosey, it starts telling you that you're in for some volatility. And it's not a bad thing. It just means that you're going to get whacked around, which I expect CPI and PPI, Michigan Consumer Sentiment, to do to us. That's it.